Let's take a look at some charts on Maker for Brave New Coin. So Maker is a utility token, governance token, and recapitalization resource for the Maker platform, which operates as a DAO. Previously, Psi and currently DAI are stablecoins with a soft peg to the dollar, and you know about Psi and DAI if you've traded in DeFi at all. Originally, it was just single collateral with ETH, and they've added a slew of other options as far as what sort of collateral you can use to mint the Psi, in this case the DAI now. This is the total value locked in the MakerDAO ecosystem. It has the highest TVL of anything in DeFi at over 6 billion US, 6.4. It may even be more than that. I don't actually know if DeFi Pulse includes stuff other than ETH, BTC, and DAI. If it is other stuff, if it doesn't include other stuff, then it's not much higher than 6.4, just because everything else is a lesser total percentage, and we'll look at that. But TVL has exploded, partly due to DeFi just going nuts since January. I mean, look at this, from July 2020 to January 2021, that was a 6x in total value locked. And then from there, it was another 2x. So MakerDAO is doing incredibly well, just looking at the numbers alone. I'm not going to go into the specifics of creating the Psi and the DAI and all that stuff into the weeds. Definitely encourage you to look into it if you haven't. If you've used DAI and have no idea where it comes from, take a look at the Maker platform and how that's done. Currently, the debt ceiling on the total DAI able to be minted is around 3.03 billion. It's currently at 2.5 total circulating. This is a site called DAIstats.com. You can take a look at all the stability fees for all the coins, all the various mechanisms. If we look over at Dune Analytics, which also reports 6.4 billion in collateral, you can look at total collateral as a graph and see how much is where. We can see how the TVL has been moving along with Maker price. So if TVL increases, Maker price of the token seems to be increasing. That finally has caught up. There was clearly a lagging price action from September until late last year when price finally moved. I don't know the exact dates of the burn and buy mechanism that got reactivated, but that plays a huge role in price as well. If you look at all these governance tokens or exchange tokens, many or most of them have some sort of burning mechanic, which reduces supply. And if demand keeps increasing, price should increase. That's just basic supply and demand. And you can also mint and burn DAI, obviously, and that's a whole separate graph and conversation. Monthly DAI volume has hit an all-time high in February, was an all-time high in January, so this is definitely moving up and to the right, exactly where you want to see any metrics in any ecosystem. People are using Maker, people are using DAI, more so than everything else, really, in the DeFi ecosystem. If you look at the burning mechanism specifically for Maker, this is makerburn.com. So for the system to burn Maker, a certain surplus buffer of 30 million DAI needs to be filled. The buffer is filled using the fees from vaults until a certain threshold is reached. Once full fees are used to burn Maker. So at the current rate, the burn will happen again in 74 days. So a pretty nifty website to see when the burns are happening, and it's going to be interesting to watch the next burn and how price reacts. If price front runs the burn or it happens after the burn, during the burn, that sort of thing. We can look at when the Maker was burned over the past couple of years. So they sort of burned a bunch and then reintroduced a bunch and then started burning again. So that happened back in October. Sometime between October and December, basically when price took off is when that burning mechanism exceeded the additional supply from March 2020, if I'm reading this right. So I would just line this up with the price and, it's really that simple, supply and demand, right? So if this continues to remain popular across DeFi and it doesn't explode for whatever reason, and there's multiple burns, it's hard to be bearish on just the fundamentals from that perspective. If we look at the transaction counts for Maker, the token, there's never been a lot of transactions for Maker. There's a governance element to it. A16Z is involved because they're big holders in that. There's a few other hedge funds. I can't remember if they've abstained from any of the voting or not, but the whole thing's a mess because very few entities control most of the maker. So it's up to them to decide whether or not they want to vote in the governance protocol stuff. It's things in A16Z, hedge fund, VC, capital type people's best interest isn't necessarily always in the best interest of the community. It's certainly in the best interest that their governance incentives are aligned, but that may not always be the case. So transaction counts spiked to an all-time high in January, partially due to token price exploding. Average transaction sizes increasing as well. So it's just hard to be bearish on any way I try to be bearish on Maker. If we look at the non-USDT stablecoin total circulating supplies, so we have DAI in the red here, previously Psi in the green. So in early 2018, Psi was kind of the only other game in town besides Tether. And then we added TUSD, and then a bunch of others, and then BUSD, USDC. So the biggest slice here is USDC. The blue slice here is Binance USD, Binance's stablecoin, and then DAI. So DAI and Binance stablecoin, BUSD, are equal as far as the total percentage of non-Tether circulating supplies. If we take off USDC, you can see that non-Tether, non-USDC total stablecoin circulating supplies are basically Binance, DAI, and PAX. If we compare everything together, Tether is the bottom three slices here. So this is Tron Tether, this is ETH Tether, this is Omni Tether. So back in early 2018, it's kind of the only game in town. And then slowly more things got added, things got more competitive. Things moved from Omni to ETH. We're adding Tron Tether now. And the Psi-DAI stuff is in the blue here, the light blue. So in the grand scheme of things, it's just still relatively small if you're talking about Tether and USDC. If you're just talking about non-USD, non-Tether stuff, it's quite large. I'd say USDC is definitely a direct competitor. It is more centralized than Maker is, but if you have a choice between using DAI or USDC as a trader in the DeFi ecosystem, you're just going to use whatever is in the path of least resistance for you. So for many people, that might just be USDC. All right, let's look at technicals for Maker. 5,200 EMAs, VPVR, yearly pivots, and RSI. So Bitfinex has the most data on Maker. They actually started trading it in mid-2018. And for the most part, it was just in doldrums of 300 to 700, 650, something like that. It didn't really do anything, go anywhere. This kind of mirrored the greater DeFi ecosystem. It mirrored a lack of having a need to have Maker in the first place, really. So they added multi-collateral DAI, they introduced a buy and burn mechanism, or began burning tokens. All the while, the 50 and the 200 cross remained bullish, despite those crosses having really no meaning previously. The stars were aligned on the EMA's perspective for a bullish move. I mean, you can't always expect like an instant 3x, right? From 520 to 1500, 1600 in a couple days. So all this sort of happens while DeFi is popping off. You get a higher high there. Again, you get a bear div. Everything's relaxing now across DeFi. So Maker, obviously in the DeFi ecosystem. If DeFi continues to do well, Maker should do well. If Maker continues to burn tokens, the token price should do well. As far as supports, any of these yearly pivots on the way down, the 200-day moving average, there's really no support until 750. So it's obviously a massive move down from here. And that wouldn't be an expectation, but if this goes into some sort of free fall for whatever reason, I'd expect a wick into the 750 zone. Daily Cloud, also bullish. It needed to bounce at around 1700 based on the Kijun. All this stuff is harder to trade on high time frames. So I would definitely watch it on the 4 hour and see how things look if you're trading this actively. But overall, I mean, you're just holding, right? There's nothing for you to do here until price moves below the cloud. Until price moves below the 200-day moving average, which at this point is at 1200. If we look at the Maker BTC price, massive sell-off from October to January. All of that was basically recouped in January, so there was definitely a partial rotation trade that was beneficial to the timing of all this as well. 5200 was recrossed bullish, tons of VPVR volume historically in this region, so this is kind of unexciting for me. I mean, this entire range looks just like the USD pair did, from 350 to 750. Anything from 03 to 07. You know, it can just range in this indefinitely until something changes that paradigm. So as bullish as this might look historically since forever, you know, it's hard to say that this won't just keep ranging, because that's what it looks like it's going to want to do. The Maker ETH pair has also really had very little bullish momentum historically, and it declined significantly in Q4 last year. All that has since been retraced. This is more of like a V-shaped price action versus just a flat range-bound price action. So there's a reasonable expectation this returns to some sort of VPVR level on the top side, between 2x the price of ETH to 4x the price of ETH. 5200 cross is bullish. So overall, you can't dispute the powerhouse of DAI, the powerhouse that is Maker, the obvious essential services that these stablecoins provide for the ecosystem, the DeFi ecosystem. The burning mechanic is bullish, and technicals are the most bullish really they've ever looked in the history of trading the coin. The USD pair is quite impressive in that it is holding a 4x plus price move rather well over the course of 3 months. The BTC and ETH pairs both look like they've essentially mean reverted, and may see some additional upside with the BTC pair ranging and the ETH pair holding the potential for 2x from here.